So we are here in this panel for the pricing part. Actually, you heard from the title, it's about claims. But for sure, it's the claims and what we believe, what will future claims bring, what drives the pricing of today. And that's what we want to talk about, so we will give you some insights there, and I will go through and guide you what we will present now. So, instead of an agenda, I brought some bullets here with me. So when we think about motor insurance and the claim side of motor insurance, so what is it what really causes headaches probably to the industry? Actually, everything more or less boils down to the longevity of the claims, or the possible longevity of the claims. It has a lot to do with what kind of assessment we have in the different countries, but there is a large influence, for example, from the legal side, whether there are changes or not. There's also large influence what happens on the medical side, what kind of developments we'll see there. So all that's influencing our claims side because it's the longevity which we have there. Let me first move to the last bullet, claims head. Also there we see different developments. So we have an impact on already incurred or future claims because possibly new claims heads are added to what we compensate for. And everything at the end boils down very much, so the influence is very much on the bodily injury side. So that's why we focus on that part. So we talk a lot about bodily injury claims, and we will go a bit more into detail there. So on the bodily injury side, we will look at different claims components. I picked out here loss of earnings, assistance, and pain and suffering, those ones driving the bodily injury side. And what Swiss Re has done to get a bit better grip on how we look at bodily injury claims is we did a study, not once, actually we do that study since more than 20 years now, and we want to share with you what kind of findings we have there and what you see when you compare different countries, one versus the other, but also how different companies within a country assess a typical claim. At the end, if we have time, and we can skip that part if we run out of time, we'll look a bit about inflation, yield, and reserving, and the impact of what we have done before, what kind of impact we'll see there. So, bodily injury claims. I talked about this study. So, study means here, what we do, actually we create a typical loss, a loss scenario. Which we can compare, so we ask ourselves, how do we assess such a typical loss scenario? For example, and Stefan Speer will go into a bit more detail, 30-year-old man, children, and so on. But don't forget about the details of the description for now. The approach is to take such scenarios, loss scenarios, and ask the same question. So how would you assess such a loss? We asked ourselves as a reinsurer, but also we went back to our insurance clients, and we did that over years. And as said, we started in the late 90s with that kind of study, and in the beginning we were covering 15 countries. So you see here from the color coding a bit which countries are those and for how long they were assessed. And then we expanded a bit for this year, so we will have 2 more countries, but we'll come to that a bit later. It's actually Romania, Bulgaria we looked into, and that results will only be published this year. As a starting point, not CEE, but to give you an idea, because this is one of the most developed countries. Mr. Talmay already talked about Italy. So when we look at Italy, what do we see? So you don't see too much here, but at the beginning you have 1990, and at the end, that's a prediction, you have 2025. So what you see is that already in the first 10 years since the beginning of the study, we have the development, you have this typical claim, remember the approach. So the assessment in the very year of the typical claim has grown by 50% in 10 years in Italy. The following 10 years, it added another 50% more or less, roughly. So we are already at double of the size of such a typical claim assessment than what we had in the beginning. And last 2 years, so that's where we are now more or less, some 14-15% added again. And then we have the prediction into the future, but don't worry too much about that. I think it's very much about already seeing this history of assessments. So we did that throughout Europe. So this is a glance. Italy was used as an example where we have developments, where we already see something which it's a mature country for the motor industry. But also we have redone a study in recent years, and that's something Stefan Ster will describe to you what we have done there.
Thank you, Nicola, and welcome from my side as well. Let me start off with describing one of the standard model approaches we use. So we generally use 2 to 3 different approaches, but we'll focus on one today, and most of our slides are based exactly on this model. And this is an hypothetical victim. We say it's a tetraplegic claim and loss scenario. It's encompassing a 30-year-old man, a wife which doesn't work and has no own earnings, plus 2 children at the ages of 2 and 6. In addition from that, we say he has a standard income depending on that country where we send out these surveys, and his injury is defined to be 100% disability and no artificial ventilation. So this is important that we standardize this throughout our markets and surveys so it's comparable from one market to the next. So just keep this in mind. This will be the most model we will use today in our presentation in the background. It's just for you to keep in mind. Some recent surveys we've done in the past years include UK, France, Poland, and this is just, again, an overview of these countries, and with the bars you see the response rate we get. So what we do is we send out to all of our clients and where we have business with and also without, and ask them do they want to take part in this study, and then answer these questions of those 2 to 3 scenarios. And you can see the response rate varies a bit, but it's generally very high. Yeah? So we're in excess of 70% in all countries, and some were even in excess of 90%. So our studies are very sound and show a good picture over the entire markets, which makes it then possible to compare. So let's go back a couple of years, maybe not back to 1990, but just to 2010. And here, as you see, an overview of the countries we encompassed that study and a wide range through the nation. So you have the UK as the biggest claim driver in that sense, and then it goes down. Depends very much on the compensation regime, if it's lump sum, if there are annuities, and what are also the care costs. It's very essential. Let me quickly point out Poland, since we're in a CEE conference right now. Back in 2010, the average estimate for this tetraplegic loss, which I showed you before, was 600,000 euros. So if we go forward 2 years, and I won't spend too much time on this, a few more countries have been added in our studies and a few developments. Nothing too big, but Poland already went up another 100,000 euros within 2 years. And that's not just our estimate, that's also the estimate from all of the insurance companies. Another big jump is Belgium, but let's not focus on that right now. Let's go to the most recent studies we have published, and that's 2015. You see a lot more countries have been added over those years, and Poland already has gone up to 900,000 euros for this average claim. Again, it's the same claim as 5 years before, but the average estimate is already 50% higher within just a very short time frame. The details, the color coding, you see the difference between loss of earning, assistance, pain and suffering, and remainder components, but we will not go into those details too much. You can see that here. What's also interesting, I want to highlight to you, because we have some people from the Green Card Bureau here today, and they'll give a speech later, is Switzerland. Switzerland, obviously being part of the EU as well, part of the Green Card Committee. In 2010, 5 million euro average loss, and then now in 2015, 9.4 million euros. That's a huge jump. There, the main driver behind it is the exchange rate. So you need to also make account for when you pay claims in a different country, in this case, the Swiss franc. We know a bit the background because of that, but it's just to highlight a very extreme case that happened. Here, just a quick overview. I'm not going to go through each one of these individually. It's just what we wanted to point out. There are lots of components we need to consider. Nicola already said it. Some get added over time. And really important is what we classify as the moral damages, the pain and suffering, and the compensation for family members. And is getting more and more important in Europe and is increasing over the last couple of years. And with that, I would like to hand back over to Nicola to go a bit more into detail the Polish market.
Yeah, a bit more detail. We are still in the same approach. We use this study approach, and we look at Poland specifically. And so this is actually the similar chart which you have seen for Italy, but now here it's Poland. Don't be confused. What you see here on the right-hand side is, and you might remember that it said 50% increase first 10 years in Italy. Here in Poland, it's more than 500% increase. And it goes up to thousands when you take into account the development up to now. So this is really something, I would say it's typical for a country where you have developments, fast-growing development on the motor insurance side and also on the compensation side. It's driven by many different topics. You see a bit the color coding here, and you can compare what kind of elements are driving that fast development. So actually it's very much the assistance side, which has grown quite a lot over time. Not so much the pain and suffering, but also there it's a growing element. And if you cannot maybe see this, that on top of the very right-hand bars, there are also other components now coming into play. And that was what Stefan just mentioned. In younger years, we see new things being added. So still the same case, this 30-year-old man, typical case we are looking at. And that's what I said. So we go back to the clients or market participants and we ask them how they assess such a typical case. And what is interesting here, it's not so much the figure itself, it's very much the different approach different companies take. It's the same case we send out. And you see there's a big variation between the assessment of the different companies. And that also holds true if you go into more detail. You see here the claims components, and you see really a huge variation how this was assessed. So, for example, if you take the loss of earnings part, it's that some companies even don't take it into account, which is quite extreme. So I just point out that so the difference in the approach really shows, and we are a reinsurer, that we really need to know when we do our costing is how the insurance company is doing that. We need to understand how the insurance company is assessing such a claim, that we really can assess how this flows then into our own pricing assumptions. I'm showing here quickly a second typical case, or this artificial claim. It's a different one. So that's a child, compensation for tetraplegic, 6-year-old child, and 80% disability. But the picture remains more or less the same. I just wanted to show you the second case, that you don't have this impression it's just one case and it's maybe driven by this specific case. So this is a different one, but the picture, so this variation between companies and their assessment is very much the same. So This was Poland. I hope, and why we now again going to a different country outside of the CEE region is because we don't want that we feel bad here in the CEE region, but you will see a quick glance on France and how that looks like there.
Okay, so we've done, as said before, the same thing in France, and to take away a bit of the scare we just gave with the great variation between the individual companies, even in a developed market like France, and here we had the study with 20 clients, you see a similar picture. The claim gets a bit more complex because in France there are other requirements on compensation, so you see more color shading, but the important thing we wanted to show here is that the standard deviation between those 20 clients is at a similar range as we have seen in Poland, and that's true for most countries. It depends very much on how much is regulated by the supervisory board, but it's in general not that good. Going forward, giving you a first glance, Nicola said it in her opening already, we're going to extend our coverage within Europe with this study, and it's going to be published this year, and we're going to go into Romania, Bulgaria, and Slovenia. So we have done and sent out the questionnaires already, we've gotten the feedback, we're just in the final stages of making it nice and putting it into a presentation so we can report back to you as well for those 3 countries. What we have done and we have seen over the last years conducting the study is that we want to extend this as well. And I've just given a quick glance there from Bulgaria, but we've done it for the other countries as well. So we also concentrate on court cases. How many cases go to court, how long until they're finally settled, because we have seen that this is becoming more and more important to finding the ultimate claim size of a bodily injury claim. So the new published mid-2017 studies will incorporate even more than in the past.
So you saw some elements which are driving very much this assessment of claims. You mentioned really pain and suffering as one, but actually, and this is really for everyone looking into such a topic, so the yield side, because we talk about longevity claims, is very much influencing how the outcome is for you as an insurer, but also for us as a reinsurer. So if you look at inflation, and this is historic figures, just as a picture, let it sink on you. So we are almost in a no inflation environment. It changes a bit now, but we are still on very, very low figures. Same true on the yield side. So that's something we for sure take into account when we assess the necessity for future reserves. And how that affects the insurance side and the reinsurance side, you can see here. And this is maybe a slide, it's not so easy to read. You start here more or less, the blue figure is the nominal claim, 100%. And you start at the very right-hand side, and there you have a yield environment of 2004. So at that point in time, you would assess, taking yield into account, this 100% only for 93%, more or less. But if then you have movement of the yield over the years, that figures varies, and you have even a drop there. So we had that in up to 2007, but then it increased. And now, and that's the figure right next to the blue figure, we are at 99.2%. So actually we're almost at a nominal figure. So, and that gives a difference of 8% from the original assessment, which is for someone who is putting this into a balance sheet and using it for the basis of a reserving. That's something which is a huge difference. So that's the insurance side. It gets more extreme if you're a reinsurer. And for sure, this is just an example. It's a certain access point being taken here. So just to see the picture, more or less. So if you're a reinsurer sitting on the excess side, you have that variation coming up to 60%. So that's why we are so eager to look into that topic and discuss with our clients this aspect and why it's really so important. But it's important for the whole industry. So, reserving, so the most technical bit. not just in inflation environment, but also a quick glance how we then go about the reserving side at Swiss Re, how we enhance that a bit, and that will be presented again by Stefan.
So I've gotten the 5-minute warning already, so I need to make it very quick, and it's a dry topic anyway, so I don't think anybody will mind if we go too quick with that. So we have identified 4 major scenarios, and maybe you've picked them up over our presentation already, that inflation is extremely important over time, setting reserves and the ultimate loss, discount rate shifts, the life expectancy as well, mortality tables change, the life expectancy increases, and also legal changes, which most of you have experienced over the last couple of years. And here we have done a study on just a heat map on the right-hand side. I'm going to go through this quickly. It just shows you the impact over time and the nominal impact for reserves in both an annuity environment and a lump sum environment. In general, lump sum is always a bit smaller because you don't have the longevity of claims. It gets out paid quicker and all that, but it's still there, and we need to consider that. What we do in Swiss Re to consider that, we have moved away from the classical standard P&C reserving and ultimate loss estimation for both our costing and reserving, and we have introduced life and health components into our loss cost pick to actually account for the inflation, discount rate shifts, or changes in mortality table to give us a better ultimate loss and incorporate all of these challenges we have seen and get to a hopefully truer ultimate loss on that side. And then at least we have 30 seconds for a closing remark, we hope.
So that was a run through different aspects of the claim side, but influence very much reserving and costing. So what we want to say here is very much already the traditional side of motor insurance, and I'm not yet taking into account any telematics development, any autonomous car development, any future trends development, which maybe brings even more uncertainty. But we are sitting here with losses happening now, which develop 20 to 30 years, possibly. So it's very important, if we want to be able to pay them out in the future, we need to do it right. And that's what we want to bring across. Thank you very much.